Well, it is one day until the federal budget, with changes to negative gearing and the capital gains tax discount all but confirmed. Prime Minister Anthony Albanese says any changes will be about supporting young people into the housing market. But it also constitutes a broken promise from the federal election just 1 year ago. Economics reporter Tom Crowley joins us now from Canberra. Tom, how is the government explaining this case for change?
Well, still a little work to do on that front, Gemma, and they've probably got one hand tied behind their back because, of course, they can't say directly exactly that there are tax changes coming in the budget or what they are. We've still sort of gotten right up to the finish line of confirming that there are changes. Jim Chalmers and Anthony Albanese are talking about them and beginning to make the case for them, but we don't know what they are, even though we suspect capital gains tax, negative gearing and trusts are all among them in some way. The government will have to answer questions about why it was that Anthony Albanese, on really dozens of occasions in the last election, was very direct that this was not something Labor was going to revisit, having been part, of course, of its opposition offerings under Bill Shorten in the 2016 and 2019 elections. The answer that Anthony Albanese gave on Radio National Breakfast this morning was essentially, look, what's changed is that it continues. It continues to go on without being addressed, and we need to address it. I think the government's view is that the political context has changed. You can look at it in terms of just simple electoral demographics, that millennials, Gen Z and Generation Alpha will constitute half of the electoral roll at the next election for the first time. Their anger about housing is something that the government knows it needs to respond to. It believes that the solution is to build more homes, but that also in the short term it needs to offer more because people are really angry about this, especially even those who recently bought houses in a context where the RBA is hiking interest rates. And that, I think as well, is something that both Anthony Albanese and Jim Chalmers have linked to populism around the world and perhaps even the rise of one nation, that when people feel disenfranchised, when people feel that the housing market's not working for them, they get angry and they take out that anger on the major parties. That's part of why Labor, I think, believes that its old 2019 housing tax agenda is ripe for a revamp. It'll still be a challenging thing to explain, and there are lots of details that we're going to look for on budget night about exactly how these will be designed. The most important question is grandfathering, because the more that Labor grandfathers its changes, perhaps it's trying to be a little bit politically safer in that and not change the rules on people who've already invested, but in a sense you preserve the past, and really you're only changing negative gearing and the capital gains tax in future for Generation X's or millennials who might hope to use them in the future, those who already have left unscathed by changes like that. So is that what we're going to see? Will there be some sort of partial grandfathering? And how widely as well will this apply? Will the changes to negative gearing and the capital gains tax apply to shares? The capital gains tax discount does apply to shares. And there are some questions about exactly what that would mean in share markets if it's applied to all asset classes, not just housing. These are all the complicated sorts of questions in the weeds that we'll get into tomorrow, but we often know that by the end of budget week we're talking not necessarily about how the government wants to frame its changes, but particular aspects that catch fire, and there are lots that could fit that bill here.
Yeah, so Tom, as you say, you're looking out for that detail. Are there any surprises left for the budget?
Well, we think we've just about had it all leaked, dropped, dripped out over the course of the last few weeks, and that there aren't too many surprises left. One of the other key elements that we are expecting now is an offset of some sort for income taxpayers, for wage earners, perhaps in the next financial year. That was something that was reported first by The Australian last week, hasn't been ruled out subsequent to that. Changes to trust taxation alongside capital gains and the negative gearing changes. We know there'll be big cuts, restraint in the NDIS and some new spending on defence. We've had some other little measures coming out on housing and a few others. We know there will be a net save. A few more details, though, on exactly what the savings will be. Where will they come from? And there are always, Gemma, little measures that we're not expecting, things that may not have a huge amount of money but might have a significant implication that we learn about on budget night as well. And the final thing that we'll be looking for is exactly what does Treasury think the war is going to do for the economy? Will it be a higher unemployment forecast and a lower growth forecast? What will Treasury have to say about the inflation that's coming down the line? Of course, in the context of the RBA hiking rates, that's an interesting question as well. It's a budget with an unusual amount in it for us to pick through tomorrow.